Good day, I'm Martin Gagel with Market Radius Research. It's Friday, May the 27th, and today we have CEO David Kratochvil, CEO of BQE Water, joining us. BQE is a water treatment engineering services and technology company for the mining industry. BQE has recently released its fiscal 2021 and its Q1 fiscal 22 financial results. And David is here to give us an overview on the financials of the company, and we're going to dig into a few things. As well, we recently did an in-depth interview with David that was posted on April 3rd, and see the show notes below for the link to that webinar. As well, check out the Radius Research channel and you can find it there as well. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company, do your own due diligence, and come to your own investment conclusions. David, thanks a lot for joining us. And yeah, please give us an overview on how you guys are doing financially.
Great. Hi, Martin. Yes, our year-end for 2021, which we released, I guess, after the several weeks after you and I spoke about the company and our business, really reflects the trajectory of the business over the last, here on the, you can see since 2017, really. And happy to say we had a really good year. 2021 continued on the trajectory of growth. We had over $2.5 million in net income and over $4 million in EBITDA. And something we're particularly proud of is the continued growth also in our margins. If you look at the net margin as well as adjusted EBITDA margin, they're very, very healthy compared to many companies, large and small out there, regardless of what business sector they're in. So we're particularly proud about that. And we also had a very solid Q1. So we can chat about that.
Yeah, I guess just so people understand how the drivers of your business, you have really three segments of revenue, how you generate revenue. You do engineering and kind of design services to build out these water treatment facilities. And then you also, through a couple of different mechanisms, you actually operate them as well. And the engineering services is pretty standard, but on the operating, either you'll get paid just a service fee to maintain it, you'll get paid for how many cubic meters of water you process, or any metals that are extracted and cleaned out of the water. When those are sold, you share in a portion of the revenue, the proceeds from those metal sales. Those are the kind of three ways you do your business, right?
That's exactly right, yes. And so in our MD&A, which we can scroll through here, it starts with the operation services here. There's a bit of a breakdown there. And as you say, Martin, under the operation services, there are several plants where we generate water treatment fees. So those would be the tolling fees for clean water. And then there are several projects, joint ventures that generate revenue from the sale of recovered metals, primarily copper. And those are in China. Now, in addition to the operations, of course, we also have the non-recurring revenue from projects, from services such as engineering, lab testing, pilot demonstration, permitting, assistance, etc. So in looking at the summary here, where we report revenues under GAAP, proportional revenue, just for people to understand, the revenues from the joint ventures are not revenues that are can be reported under GAAP. So under GAAP, anything that comes from China is excluded. So when you look at revenues under GAAP, that number represents the $7.5 million for 2021 represents a combination of tolling fees, for clean water from operations, and all the services, the non-recurring revenue from projects outside of China. The proportional revenues include the revenues or our share on the revenues from the joint ventures that are in China. And of course, net income, it's reflecting all of this. So the net income is net income. That doesn't really matter. That's why if you just take our GAAP revenues and look at our net income, it looks really, really high net income, and adjusted EBITDA of 4 million on GAAP of 7.5 really looks skewed. But it's only skewed because we cannot report the Chinese revenue under GAAP, but it's fully reflected in the bottom line and the adjusted EBITDA, if that makes sense. So the proportional revenue really is a combination of the GAAP revenue plus the China metal sales.
Your Chinese joint venture agreements, you don't see the revenues from that. You don't see the expenses out of that. You only get the income coming out of that on the actual GAAP financial statements, which then inflates the margins because there's all sorts of expenses and revenues that aren't appearing on the financial statements, right?
That's exactly right. So all we see is our portion of the net income from the joint ventures reported to our bottom line here. But in the graph that I'm showing here on the margins, these margins are with respect to proportional revenue, not to GAAP. I mean, if I plotted this against GAAP, I mean, right, it would be, so these are really the proportional revenue margins. If I plotted the GAAP margins, I mean,
yeah, it's over 50%.
We would have a margin of 80%.
Yeah. So either way you cut it, they're looking pretty good. I can't disagree. Okay, I think that sort of gives an overview of the nerdy accounting stuff. Why don't we look at the adjusted EBITDA or the chart above that? Things seem to be going well since 2017. And I think broadly speaking, you've implemented more projects. You build, or you don't build, you design and sort of project manage these water treatment centers, and then you make money off of that, and then you get a long tail recurring revenue and income stream as you operate them, getting rewarded either by operating it or a tolling type service. So I presume you've gotten more efficient and gotten economies out of scale, but you've just layered in a bunch of new projects, which is driving those bar charts higher.
Well, it's actually a very interesting question that you asked because, as I explained it, I think in the interview, the sales cycle, and by sales cycle, I mean from the first time we make contact with a client to actually starting the recurring revenue from operations, that can be very long. Sometimes, and it's long because the projects go through stages of permitting, feasibility studies, lab testing, and all those services that we need to deliver first before the plant actually gets constructed and we can start operating. And so this time horizon between 2017 and 2021, all of those improvements that we've achieved are not actually reflecting operations. They are reflecting largely the upfront services that we need to deliver to actually build plants and start operating them. And it's what's really exciting about our story, and what we're going to see in this year, next year, and the year after, is that these plans that we've been working on, the projects we've been working on since 2017, will finally reach the operation stage. So what we're anticipating to see this year, next year, and the year after is that on top of these blue bars, you will see an increase that's going to come from the new recurring revenue that we haven't had. So we have existing recurring revenue, and that's still there, but we're going to layer on new recurring revenue. And of course, we're hoping to grow our project portfolio as well for the services, the non-recurring revenue side. But that's going to be only relatively small, incremental. The big jump is going to be from the recurring revenue that we're going to start reporting. And because of those projects that we're bringing online, those projects are actually at sites that operate year round. We're going to see less of a fluctuation quarter to quarter. There's still going to be some fluctuations that are driven by climate because, obviously we treat water. The water inventory is driven by climate, how much it rains, how much snow there is, and that seasonality may still be there, but it will be diminished as we move forward in 2022, 2023.
You exited 2021 with 5 projects sort of operating. I forget the term. You initiated another one in Q1 of this year, I believe. So now you have 6 up and running, and I believe you have scheduled a couple more or some more to start generating recurring revenue this year. Could you just fill in some details behind those items?
Yep. So we just started operating. The projects that are coming online this year, they're both in the United States. One is in Eastern United States, one in Western United States, and the one in the East, the plant in the East, is up and running. The water volumes that we've treated so far are much smaller than we anticipated, but we're really seeing that the water is there, and then they will catch up once their feed pumping system that's outside of our battery limits is fixed. So that one's running, and we already have recurring revenue from that one that reported in Q1 this year, but small numbers because the volume was lower than usual. And the second one is currently transitioning to operations, the one in Western United States, and we should be seeing a recurring revenue from it actually starting in Q2 and then through the rest of the year. So those 2 are new, and we have basically visibility on a couple of projects that will come online next year. Towards the end of the year, we'll be very busy because there will be basically 3 plants that will be bringing into operation. So there's going to be a bit of a hiatus between these 2 plants that we just entered operation this year, and then we're looking at 3 more at the end of next year.
So at the end of 2022, you should have 7 operating plants, and then by the end of 2023, you're up to 10 operating plants.
Yeah.
And are they all roughly the same economics? Like you ended, will they all generate kind of, I don't know, very ballpark, it looks like about $1 million of EBITDA a year? Is that like a very crude thumb way to kind of look at these things?
Yeah, it's the average. Again, I would encourage everyone to look at that presentation that we went over earlier in April, but because there is sort of an average project for us, and that average is, roughly $500,000 a year to the bottom line, and about $1.5 million in GAAP revenue. Yeah.
Okay, so I sort of overestimated that because you have your recurring or your ongoing engineering fees in that. So you mentioned the seasonality of it. Obviously, the annual the quarterly seasonality, the annual revenues and EBITDA sort of blends that out. Q1 is traditionally your seasonally weakest quarter. Is that right?
That's exactly right.
And then there are 2 factors, and they're both basically kind of weather related. In northern Canada, not a lot of water is flowing, so there's not a lot to process. And is that kind of similar in the Chinese operations as well?
Yeah, in China, it's more because they go through dry and wet season. Okay. And Q1 is their dry. And starting with mid-April, towards the end of April, they're starting to head into a wet season. So typically Q2, Q3 are very, very strong for the Chinese operations. And the Canadian operations have sort of tail end of Q2, but mostly Q3 and part of Q4, because most of the sites where we operate basically have a window of give or take 4.5 months, and they have to treat and discharge all that water within that short window period of window, because between basically the late spring freshet and the freeze up in November. So that's basically what's underlying the seasonality from the recurring revenue perspective for us. And because the recurring revenue, actually, when you look at the proportional GAAP revenue, the recurring portion is over 2/3. That fluctuation historically has been noticed, significant, and we should see less and less of it because the plants in the U.S., like I said, they operate year-round. But there's also the non-recurring portion of the revenue that's very difficult to time. So sometimes projects get a green light, sometimes they stop, they pause. So that the timing of this is also very difficult to predict. So there's always going to be fluctuations in our figures. And that's why we always encourage investors to follow us, mostly looking at the rolling 12 months period, because that's way better reflection of the trajectory rather than judging quarter by quarter and comparing, quarters like that.
Just very briefly, you've got a very healthy balance sheet. You minimal debt. I think you've got $4 million of working capital, and $11 million of equity in the company. You don't get cash flow from the Chinese operations. That's sort of accrued in an accounts receivable kind of. How do you get when do you get your cash out? Is it on an annual payment once they see sort of the performance through the year?
Yeah, again, a very good question. So we typically get our dividend from the joint ventures. We get the dividend once a year, and the timing of the dividend is dependent on the completion of tax audit and subsequent payment of taxes in China. So we can't transfer the money until the joint venture is fully reviewed and audited in China, and then by the Chinese regulators, and then basically we have to pay tax from the previous year's profit, and then we transfer the dividend. So there's a delay. So for example, this year, the dividend we're going to receive, and the timing of it really depends. Sometimes it's typically we bring it in October, September, but it really depends on the timing of the tax audit. But regardless of the exact timing, whether it's August or September, or October, the main point is that the dividend's always reflecting the results the previous year. So the dividend we're going to receive in 2022 is based on the 2021 results, and it's going to be pretty sizable dividend. I probably think it's the largest one we've ever seen from China. It's going to be over $2 million Canadian, and reflects basically the results in 2021, which in turn reflected pretty strong metal prices, copper price in 2021.
Is the size of the dividend equivalent roughly to the income from joint ventures, or is it like you get 80% of the income as a dividend, or how is there any way to kind of ballpark that?
Yeah, it's I believe we have some small amount that needs to be withheld, or traditionally it had been withheld. A statutory requirement to maintain certain amount within the JV. But yeah, I would say it's probably 90% of what you would see as the income from the JVs that we report. So it just keeps accruing as you say, through the year, and then we get the cash transfer once a year. Yeah. And I think that we actually, this would be a good question for our CFO. I believe we fully paid up. There is a certain provision that you need to basically retain part of the net income within the JV to up to a limit of the initial capital contribution by the parties. And I think we're this year we're basically paid up. So I don't know if it's 2021 or 2022 that we would then see basically the full amount, minus taxes that we pay there, obviously. But the taxes are reflected on the year-end results when you look at the difference, between the EBITDA and the net income.
Gotcha. With you're expecting 3 projects to come through or to get sort of completed next year in 2023. When you win a new project, or at what point do you announce, hey, we've got this project, it'll take 12, 18 months to finish up, or do you announce those projects, or do you only announce them once they're commissioned and they're operating?
Yeah, we typically announce them when we sign. So there's several announcements. We make the first one when we sign the engineering services agreement, and so that's the agreement that under which we provide engineering services to design and build a plant. So we don't announce the projects until they get to a stage where we know this is now going into design for construction. That's the stage where we announce the projects, and all the previous stages of permitting, piloting, various studies, we don't typically announce those because none of these individual contracts for scoping level, feasibility level engineering, lab testing, piloting is really material to the company. And there is some uncertainty about these projects proceeding into actual implementation. So it would just create a lot of noise. But at the point where we know this is going to get designed for construction, and then the operating agreement will follow, we'll announce it. And then second announcement will be when we sign the operating services agreement. And the third announcement is when the project is fully in operation. So I believe we did one for you see this one down here, power utility Ashpont in Virginia, that just entered operations, and the first revenue from it as the recurring revenue started in Q1. So that's why it appears in our MD&A for Q1.
Gotcha. Have you announced the 3, like the engineering services contract for the 3 you're expecting for next year, or is that still news flow? Like you're expecting them, but it's not kind of confirmed yet. Where are we on those 3?
Yeah, that's a good question. There's always sensitivity of the clients with respect to when to announce things, and sadly for the projects that we're currently working on and that we know will be in the bucket for 2023 for operations start, there is some sensitivity around the timing of disclosure for those, and so I don't believe that we announced them yet.
Okay.
But I believe that one of them we announced the engineering for construction started. The other ones we haven't yet. Yeah.
What sort of, with your water treatment fees, let's say whatever, there is some force majeure issue and it shuts down the mine so they don't need it. Do you get paid sort of a base level after it's been sort of operating, or do you have kind of minimal levels that are guaranteed, or do you take on a bit of that kind of operational risk?
No, we don't. Well, I think the simple answer is it depends. We have basically 2 types of agreements around tolling fees. One is where we do assume a little bit of risk, and we basically have a minimum guarantee. In either case, we have a minimum guarantee. But the split between what we would call a fixed fee, monthly fee, let's say, and the performance fee that's linked purely to the cubic meters of water that we discharge, so it's dollars per cubic meter, that split varies. In some projects, we're heavily skewed towards the fixed monthly fee with fairly small performance per cubic meter. So that really insulates us from the variability in the volume of water that we treat, but also gives us very little upside. And then we have projects where we're quite heavily skewed towards the performance, which means volume of water. But in either case, we have a guaranteed minimum, and that guaranteed minimum just guarantees is that at the end of the day, we're not going to lose money on this, and we're going to make some minimum margin that we agree on with the client.
All right, and one final question here. Inflation is on everyone's mind. Do you sort of have pass-through chemical costs or labor costs, or do you have inflation buffers or escalators built in?
Yeah, excellent question. We don't provide chemicals and power. So that's the client providing those utilities to the treatment plant. All we do is provide services in the form of professional fees. And those fees are typically in our agreements adjusted once a year based on the CPI. And the adjustment is basically automatic.
Okay. All right. Well, we should wrap it up here. Any final comments or thoughts you want to say before we wrap this up?
No, I think I think that the figures that we achieved for 2021 and Q1 2022 really speak for themselves. I encourage people to look at the interview that you and I, Martin, did earlier this year. If investors have questions, they can always reach out directly to me, and I'm directly reachable through the website. There's also a piece I just wanted. I received news about that just this morning about gold, special sector gold focus in the Globe and Mail today, and we're featured in there quite predominantly on the new technology sustainability part. So encourage people to look at that, and very excited about the next couple of years. And thank you, Martin.
All right, I will try to hunt down that Globe and Mail article and put that in a link in the description below the video, so hopefully you can find it there. David, thanks a lot for joining us. Solid performance in 2021 and starting off 2022 with that. So thanks a lot, and have a great day.
Great, thank you.